Today we'll be talking about stablecoins. Stablecoins have recently gained the spotlight of the media and attention from crypto investors around the world. It's supposed to be a safe haven for investors to store their money, which equivalent to the asset that backed it, which are normally fiat currencies such as the US dollar and British pound, commodities such as gold and silver, crypto-backed such as using mainstream cryptos like Bitcoin and Ethereum to back its value, and algorithmic stablecoins, which uses the program to manage the supply to maintain its peg. Its value should always be equal to the amount that it backs because that is the whole point of a stablecoin, which provides a stable price. Nonetheless, many of these stablecoins failed. The most notorious one will be UST, which its price depegged and plunged under 10 cents right after the crypto market crashed and investors kept on selling its native token Luna and its stablecoin UST, causing a death spiral. Countless people has been wiped out and lost all of their entire savings in this project. Even major players like Binance suffered major losses as well. Another one that happened quite recently is AUSD, which is a stablecoin built on Akala. After hackers exploited a bug in a newly deployed liquidity pool to mint over 1.28 billion tokens out of thin air, the price of AUSD plunged to nearly zero. The other temporary depegs that happened, such as USDD and USDT, also made people to question if stablecoins are really as trustworthy as they claimed. According to the website CryptoSec, there are a total of 23 stablecoins failed to deliver their promise as of today. Many of them failed due to liquidity issues, which causes the price of the token to depeg and plunge significantly close to zero. But in the most recent stablecoin depeg, it is tied closely to a crypto exchange, which is Huobi. HUSD is a stablecoin issued by Stable Universal Limited in conjunction with Huobi Exchange on October 2018. Last week, HUSD lost its dollar peg, plunging as low as 82 cents before recovering to the low of 90 cents, eventually making a full recovery back to $1 before dipping back to around 99 cents. What happened? According to Huobi, which to its credit quickly moved to find out what was going on and communicate with HUSD holders, the depeg was caused by a decision to close market maker accounts in several regions to comply with regulations. They said that a difference in banking hours between various regions caused a liquidity problem, causing HUSD to lose its dollar peg. Ultimately, the peg mostly recovered, and Huobi told its users that it was nothing to worry about.
You fellas have nothing to worry about. I'm a professional.
While digital currency markets did plunge at the same time as HUSD lost its peg, it's unlikely the two events are correlated. HUSD only has a market cap of 81 million and a daily trading volume of 50 million on average. So it's a relatively minor stablecoin compared to USDT and USDC. Even at the peak of the bull market, before the crash ever began, its market cap has never gone up above $1 billion. In fact, HUSD is so small that both Paxos and FTX have chosen to abandon it because they know that the investors are losing confidence towards the stablecoin. In these recent months, it has demonstrated to us many things. First, we saw Terraform Labs UST implode, plunging the digital currency sector into a bear market from which it has not recovered yet. Shortly after that, we saw USDT from Tether and USDD from Tron both lost its peg briefly before recovering back a few weeks later. The lesson to be learned here is simple. Stablecoins in their form can't be trusted or relied upon. Many of them are unregulated, and financial papers behind it are not published and audited. As normal investors like you and me, we will never know the real situation of the institution that issued the stablecoin. While HUSD holders can count themselves lucky that they can now cash out for real dollars this time, the holders of UST weren't so lucky. And the holders of USDT and USDD and other stablecoins might not be so fortunate in the future as well. Digital currency traders and speculators should exercise caution and cash out of stablecoins into real money before it's too late. Never forget that although the price of crypto is volatile, stablecoins may be the same as well, just waiting for the time to implode.